G'day and welcome to a special long-form edition of the V2U Research Australian Market Wrap. It's Tuesday, May 5th, 2026, and we have a mountain of data to unpack from today's session on the ASX. Before we dive into the local numbers, it's worth noting the global backdrop. Markets worldwide are on edge as geopolitical risks and sticky inflation figures continue to dominate the headlines, setting a cautious tone for our own trading day here in Australia. The S&P ASX 200 index ultimately closed the session at 8,680.50, dropping 16.60 points. While a 0.19% decline might seem modest, the intraday volatility told a much more detailed story of investor hesitation and sector rotation. Looking at the rolling 5-day performance, the index has now shed 0.35%. We've seen a consistent pattern of one step forward, two steps back, as the market struggles to find a sustainable catalyst for a breakout in either direction. Perhaps the most telling statistic is our year-to-date performance. Despite the numerous geopolitical and economic shocks we've weathered in 2026, the ASX 200 remains virtually unchanged since January 1st. It's a classic tug-of-war between resilient earnings and rising discount rates. The primary source of external pressure today was the deepening tension in the Middle East. News broke that President Trump has directed his senior aides to begin preparations for an extended blockade of Iran, a move that significantly escalates the regional risk profile. Energy markets reacted predictably, with oil prices climbing as traders priced in a potential supply disruption. For a market like the ASX, which is heavily weighted toward resources, this creates a complex environment where energy producers benefit while transport and retail sectors face rising cost pressures. Let's pivot to the charts. From a technical perspective, the bulls are currently defending a very important line in the sand. The index continues to hold above the key support zone near 8,383.2, which has served as a reliable floor over the past several weeks. For the bullish market participants to truly take control, we need to see a convincing break above the near-term resistance located around 9,200.9. This level has proven to be a formidable ceiling, and a clean break here would likely spark a new wave of momentum buying. Our momentum indicators, however, suggest we might have more consolidation ahead. The 14-day Relative Strength Index is currently reading approximately 42.57. This is in that no man's land, suggesting neutral to slightly bearish momentum with no immediate signs of being oversold. The biggest domestic shock of the session was the March consumer inflation data. CPI accelerated to 4.6%, up from the prior reading of 3.7%. This was significantly higher than most consensus estimates and has completely reset the market's rate expectations. This inflationary spike has all but guaranteed a hawkish stance from the central bank. We are now seeing the market price in a high probability of further cash rate hikes at next week's central bank meeting. The RBA's mission to cool the economy is clearly far from over. Surprisingly, despite the headline index being down, the internal market breadth was actually quite positive. 7 of the 11 sectors managed to end the day higher, suggesting that investors were rotating into defensive and commodity-linked areas rather than exiting the market entirely. Energy was the undisputed champion of the session, gaining 0.89%. Over the last 5 days, this sector has surged 1.43%, fueled by those rising global oil prices and the ongoing supply-side concerns in the Middle East. We also saw notable strength in information technology, which rose 0.76%, followed closely by telecommunication services and utilities. These sectors are providing a much-needed buffer against the volatility in the more cyclical parts of the market. On the downside, the materials sector was the primary anchor on the index, correcting 0.55%. Our major miners are facing a double whammy of softening global demand and the broader risk-off sentiment that often accompanies rising geopolitical tensions. In the individual stock space, Capricorn Metals Limited stole the limelight with a massive 9.3% gain. The gold producer is clearly benefiting from the safe haven flows we're seeing into precious metals as global uncertainty spikes. Ventia Services Group also posted an impressive 5.7% rise. This infrastructure services giant continues to attract buyers who are looking for stable, contract-backed earnings in an otherwise turbulent macroeconomic environment. It was a different story for Codan Limited and IDP Education, which recorded the largest declines of 7% and 9% respectively. These moves highlight the sharp punishment being handed out to any company that misses the mark on growth or faces regulatory headwinds. As we look ahead to next week, the central bank meeting will be the make or break event for the market. Investors will be dissecting every word of the RBA's statement for clues on the terminal rate and the potential for a soft landing versus a more aggressive tightening cycle. In this environment, diversification and a focus on technical support levels remain key. While the geopolitical noise is loud, the underlying sector strength we saw today suggests that there are still significant opportunities for the discerning investor. That's all for today's comprehensive market wrap. We'll be back tomorrow with more insights and analysis to help you navigate these complex markets. For V2U Research, I'm your host. Thanks for watching and stay informed.
The information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.